everybody. Another interesting day on Wall Street. As per the usual, excuse me, it's a struggle of going live. Your errors are publicly known, but you know what? It's also the beauty of it. So, today, we did get abruptly higher. We've been doing a lot of watching on crude oil as well. The E-mini S&P today did come right up to that 20. So we were within 4 points of the 2600 level. We came back down and closed towards the bottom third of the range, creating, wouldn't quite call that a shooting star. I like to see the close a little bit closer to the open. However, considering the fact that we did have a kind of day like that coming into a major resistance area, does show me that perhaps something could be on the horizon here. I'm bearish stocks. I have been. I haven't believed this was anything more than just a little bit of mean reversion after a very harsh sell-off, which is natural. It's organic. If it didn't do this, I would be afraid, which, not gonna lie, I kind of am afraid right now. FOMO or whatever. FUD, call it FUD, but I think we all have a reason to be with these traditional markets. So, we're going to wait and see. The futures are down right now a little bit over 8 points at the moment, 8.25. We've been open a little bit over 2 hours now on the futures market. I've been using this 4-hour chart, which really can be a helping hand for these futures to get a great idea of what's going on. What's going to be going on into the open. 4 hour, we're bouncing off of the 200 period moving average, starting to sell off, going below the ADMA. We just had a price flip on the sequential, so we probably won't have an answer until midnight, turn to the earlier hours of the morning. But as of the way it is looking right now, it looks like there is the potential for a lower open tomorrow. And with the actual S&P itself, I do believe, because I watch the futures, the numbers get a little wacky. 4 hour, 1 day. Okay, so we did have a doji, a gap up actually into a doji on the actual S&P itself. So a lower close tomorrow would just confirm the fact that we could be heading back down, going back down to test the prior swing low. I was a gambling man, which I'm a trader, so technically I am in a way. I would have to say that tomorrow's going to be lower. I do use that 8 EMA to gauge overbought, oversold versus stochastics or RSI or any of that noise. It's just so much more reliable. Because stochastics, RSI, those things will stay oversold for extended periods of time. And the EMA, the further you get away from that thing, especially a short one, the higher the probability that thing's going to come crashing back down to retest. And we were pretty far away with these just crazy explosive, 3% days in traditional markets as well as the stock futures. I mean, they're just doing more of this trying to trade stuff. I almost don't even care anymore because all this is reflected in the price. Dovish Fed, that can't be bullish for the stock market. Technically it is, the whole idea is that there's going to be more cheap money. It's going to keep flooding into the stock market. Well, if the economy is weak, whatever they say it is, it's definitely weak, then technically that should be bad for the stock market. I mean, we are in a bear market after all. Like, you listen to the media, they tell you to buy. Donald Trump said to buy. Everyone's telling you to buy. Everybody thinks that this is the reversal right here. There's absolutely no reason to believe that. We're on a 6 on the weekly time frame of the S&Ps. 4 hour, 1 week. Right up to the ADMA, which is perfect. That's exactly what I was looking for this week. I don't know how it just ended up being so perfect that way. So as long as we stay below that 2600, we will continue the sequential. And at this rate, the way that things are looking on these shorter time frames, it looks like they could be bringing it back down closer to the open of the week, which is, that's what I think is going to happen at this rate. So we're looking at about 25.30 to close the week off, to get back down to that level. And that could give us enough space to potentially get below the support level down here, where the swing low is 23, approximately 50. I'm rounding this technical analysis. Price action, and this isn't an exact science. It's not down to the T. So if we do close towards the lower end of the range, I do believe that we could see a new low here. I don't think it's going to go as low as my next target at about 2200, but we shall see. These things just seem to drop, and when they drop fast. It was beautiful. Big action on the dollar tag. I don't even care about bonds right now. The dollar, I've been, if you look at my Facebook page, you'll know that I've been bearish the dollar for some time now, and that the top on this thing has just been rolling over. I love rounding tops. I love rounding bottoms. They create explosive moves almost always, and that's exactly what the dollar did. Now, I think we could come into consolidation on the dollar. We do have a setup trend line down here, right at about 95, as well as 95. It's like one of those round numbers that everybody's putting limit orders in that. It's Bahamas today. Detox tea. It's good for you. Try it. So, I don't think we're going to go very much lower in the dollar this week. That did send the euro soaring, which was bad for me because I was proceeding out of my euro position too early. It happens. So the euro just absolutely exploded. Today, specifically, up almost 1% against the dollar. 115.5, which is a beautiful move in the euro. Gold did follow suit. We did close. We're slowly incoming into this $1,300 area, which is, I presume, I don't do a lot of studies on gold. Like, I will overnight GLD and SLV options, but I don't do a lot of long term on gold, so I don't have a major resistance on gold in the near term unless they print almost some kind of a setup trend line, which hasn't quite been done yet. Gold is like really rounding. I'm almost looking for like a cup and handle in gold. I wish you could see this, but it's going down into this U shape, which is typical of a cup and handle. And then you make the handle, and then you're a buyer as soon as that thing finds support. So I'm not far away from looking for something like that, as long as we don't get above I'd say, yeah, look, 1300. That's where it stopped before its last sell-off. This is on a daily time frame. So, yeah, we did. That was really weird. I just had a really large ascending triangle, and it came back and supported on that ascending support. Just very weird. Okay, so if we don't get above 1300, and that does end up being resistance, I don't think it's out of the field that we see a nice little pullback here in gold, which I may actually put a position on. I don't trade gold often, like I said. Like, it's just very manipulated, and returns on gold I just don't think are good. Gold's a great store of value. It's a good insurance policy, great thing to own physically, but I don't trade futures, and the returns on SLV and GLD options, this isn't even worth the risk, in my opinion. But I do like to keep an eye on gold, because if it does get hammered, silver's going with it. It's a good buying opportunity for physical. With the dollar looking like it could stabilize around that support area there, that could be the catalyst to start forming a little bit of a handle here in gold. And this is totally speculation, because pattern trading, it's like you got to see the pattern and set your buying points. Some people, everybody does pattern trading differently. I typically don't do a lot of it, but it's always good to see these kind of things. Crude oil, boom, set up trend line. It exploded today. We had about 5% crude oil up. We've seen some very explosive moves in crude. I think that this little relief rally here in crude is starting to get a little bit extended, and I am reacting accordingly. Seems to be a common theme. We see these big explosions after a little rally on good volume. I would say that we're probably starting to run out of buyers here. We're coming up to the 50-day moving average, as well as a setup trend line. You can see the thing. Too many lines. It's so easy to get jammed up with all these lines. So yeah, I'm coming to you from my iPad. Yeah, $52 setup trend line. So we got like a double resistance cluster up in here, from 52 to about 53 area. I'm still not very bullish on crude oil, like, whatsoever. Everything you read, inventories are stacking. OPEC's freaking out. Last time OPEC tried to come to an agreement, they missed their projection for their cut. So we're going to wait to see. They're floating those stories out right now, which I don't have up in front of me, because crude is a little bit more reliant on those fundamentals as opposed to the stock market. It's very fundamentally driven, and so it's usually good to keep up on those things. But at the end of the day, if you're good with TA, there's just no reason to look at that stuff. And when they really start battling, like you see OPEC doing, saber rattling, trying to get crude to go lower or higher, manipulating the price, like, it's not even worth the trouble sometimes. I love crude. I love USO options. Great products, lots of volatility. Buying options, I'm not saying IV, so excuse me, I'm not used to wearing a shirt. I fix stuff. I don't wear button-down shirt today, so just bear with me. I think I might stop doing this dressing up thing. It's ridiculous. But anywho, yes, I love oil products. Bonds, we get a little hammer today. The two did not close below the one. They're currently starting to come up. I had a pretty low target, actually, for bonds down around 143, which at this rate, let's see what happens before this candle closes tomorrow at 5. However, I just live with very loud people. I like to be very loud while I'm doing this. I don't know why. But with that, bonds are reversing, which for short stock kind of positions and bears on the stock market, seeing this flood a little bit back into bonds, I think is pretty bearish for the stock market. We'll have to see what the dollar does, because the dollar's just getting torn up, but I'm still not 100% sure if I am getting into a position here. I'm leaning towards no. I just don't like that. We get hammered, and they're already starting to bring the thing back up. 3 days, hammer candle. I'd like to see bonds a little bit lower in order for any kind of position to come in. I'm keeping an eye on them because it just keeps rotating between bonds and stocks, and I'd prefer to be short, but if there's a good opportunity in bonds, I have no problem getting in. I think that's the three major ones that I'm going to cover this evening. Just keep your head up if you're out there trading, if you're out there getting butchered in this market. Just keep your head up. I mean, this is my first stock bear market, and honestly, I'm loving it. I love bear markets. I love trading at the downside, so by no means am I worried, scared, any of this. I love this. I love this volatility. If you're a trader, I think bear markets have way more opportunity than bull markets. You have much faster moves. You can make much greater profits much faster. So just keep your eye out for some great opportunities here in the stock market, here in the euro, as well as crude oil. And I will come to you tomorrow. Have a good one, everybody.